Welcome back, everybody, to another cryptocurrency news article. This one comes out of Cointelegraph, and it's on how and why do stablecoins depeg. Discover the causes and mechanisms behind stablecoins depegging. This article comes to light part because of yesterday's situation. Welcome back, everybody, to another cryptocurrency news article. This one comes out of Cointelegraph, and it's on how and why do stablecoins depeg. Discover the causes and mechanisms behind stablecoins depegging. This is probably in due because of USDC's depegging the other day, but let's go over and learn a little bit more about stablecoins. Stablecoins are a type of cryptocurrency designed to have a stable value relative to a specific asset or basket of assets. Typically, a fiat currency such as the US dollar, the euro, or even the Japanese yen. Stablecoins are designed to offer a stable store of value and medium of exchange compared with more traditional cryptocurrencies like Bitcoin and Ether, which can be highly volatile. Fiat money, cryptocurrencies, and commodities like gold and silver are examples of assets used to collateralize or back stablecoins. Tether, USD coin, and DAI are a few examples of stablecoins pegged to the US dollar. Stablecoins can also be algorithmically stabilized through smart contracts and other mechanisms that automatically adjust the supply of the stablecoin to maintain its peg to the underlying asset. Now, despite the potential benefits, stablecoins are not without risks. The most significant risk with any stablecoin is the potential for its peg to break, causing it to lose its value relative to the underlying asset. Now, depegging is where the value of the stablecoin deviates significantly from its peg value. This can happen for various reasons, including market conditions, liquidity issues, and regulatory changes. USDC is a fully reserve backed stablecoin, meaning every USD coin is backed by actual cash and short dated United States treasuries. Despite this, USDC issuers Circle announced on March 10th that USDC has had depegged from the US dollar, with around $3.3 billion of its $40 billion in USDC reserves stuck in the now defunct Silicon Valley Bank. The bank, the 16th largest in the US, collapsed on March 10th and is one of the biggest bank failures in US history. Given USDC's collateral influence, other stablecoins followed suit in depegging from the US dollar. That was a tweet from Circle letting people know about what happened. But MakerDAO, a protocol based on the Ethereum blockchain, issues DAI, an algorithmic stablecoin designed to preserve a precise one-to-one ratio with the US dollar. However, DAI also fell off its peg amid the Silicon Valley Bank collapse, mainly due to its contagion effect from USDC's depegging. Over 50% of the reserves backing DAI are held in USDC. Tether issues USDT, with every USDT token equivalent to a corresponding fiat currency at a one-to-one ratio and fully backed by Tether's reserves. However, USDT also experienced a depegging in 2018, which raises concerns about the overall stability mechanisms of stablecoins. Now, the importance of stablecoin pegs. The importance of stablecoin pegs is in providing a stable and predictable value relative to the underlying asset or basket of assets. Typically, a fiat currency like the US dollar, stablecoins are a desirable alternative for various use cases, including cryptocurrency trading, payments, and remittances, due to their stability and predictability. With stablecoins pegs, traders may enter and exit positions without being subjected to the price fluctuations of cryptocurrencies like Bitcoin or Ethereum. This is important for institution investors and companies that depend on a reliable store of value and a medium of exchange to run their operations. Now, cross-border transactions can also be made more accessible using stablecoin pegs, especially in nations with volatile currencies or restricted access to the conventional financial services. Compared with more traditional methods like wire transfers or remittance services, stablecoins can offer a more effective and affordable way to make payments and transfer value across borders. Stablecoin pegs can also increase financial inclusion, especially for people and enterprises without access to traditional finance services. Stablecoins can be used to make payments and transact in digital assets without requiring a bank account or credit card, which can be crucial in developing and emerging bank markets. Now, why do stablecoins depeg? Stablecoins can depeg due to a combination of micro and macroeconomic factors. Micro factors include shifts in market conditions, such as abrupt increase or decrease in stablecoin demand, problems with liquidity, and modifications to the underlying collateral. Macro variables involve changes in the overall economic landscape, such as inflation or interest rate increases. For instance, a stablecoin's price can momentarily exceed its peg value if demand spikes due to increased cryptocurrency trading activity. Yet, the stablecoin's price could drop below its fixed value if insufficient liquidity matches high in demand. Now, on the macroeconomic front, if there is a high inflation, the purchasing power of the underlying asset that supports the stablecoin may drop, leading to a depeg event. Similarly, adjustments to interest rates or other macroeconomic measures may impact stablecoin demand. Now, regulatory changes or legal issues can also cause a stablecoin to depeg. For example, if a government were to ban the use of stablecoins, demand for the stablecoin would drop, causing its value to fall. And a depegging event can also be caused by technical problems like smart contract bugs, hacking attacks, and network congestion. For instance, a smart contract flaw could result in the stablecoin's value being computed improperly, causing a sizable departure from its peg. Now, how do stablecoins depeg? Stablecoins depegging typically occur in a few steps, which may vary depending on the specific stablecoin and the circumstances that lead to the depegging event. The following are some general features of the depegging event. The stablecoin's value deviates from its peg. As noted, many factors such as market turbulence, technological problems, a lack of liquidity, and regulatory problems may result in stablecoins depeg. The value of the stablecoin may change dramatically relative to the pegged asset or basket of assets. Then you got traders and investors react to depegging events. Whether they link the stablecoin value will eventually return to its peg or continue to diverge from it. Traders and investors may respond by purchasing or selling the stablecoin when it dramatically departs from its peg. Look on chain was like, how will funds respond to the USD depegging? Panic selling USD or buying USDC at the bottom. Here are the operation funds, hoping it can help. So then he gives a list. Now there's arbitrage opportunities arise. Arbitrage opportunities could materialize if the stablecoin's value drifts away from its peg. For instance, traders may sell the stablecoin and purchase the underlying asset to benefit if the stablecoin's value is higher than its peg. The stablecoin issuer takes action. The stablecoin issuer may take action to rectify the problem if the stablecoin's value continues to stray from its peg. This may entail changing the stablecoin supply and the collateralization ratio and other actions to boost trust in the stablecoin. The stablecoin's value stabilizes. If traders and investors adjust their position and the stablecoin issuer responds to the depegging event, the value of the stablecoin may stabilize. The stablecoin's value might return to its peg if the stablecoin issuer successfully wins back public trust. Now, risks and challenges associated with stablecoins depegging. Depegging stablecoins can present several risks and difficulties for investors, traders, and larger cryptocurrency ecosystems. So yeah, the risks and challenges could be caused by market volatility, reputation, liquidity, counterparty risk, and regulatory risk. Now, market volatility, when stablecoins depeg, the market may experience severe turbulence as traders and investors alter holders in response to depegging event. This could lead to market uncertainty and raise the possibility of losses. There's a reputation risk. Depegging stablecoin risks the issuers and the large cryptocurrency ecosystem reputation. This may make it harder for stablecoin issuers to draw in new users and invest and decrease the market's total value. There's also liquidity risks, which liquidity issues may arise if a stablecoin depegs because traders and investors sell their stablecoin in significant quantities. As a result, the value of the stablecoin may decrease, making it challenging for traders and investors to liquidate their holdings. There's counterparty risk, where traders and investors may be exposed to the risk of default by the stablecoin issuer or other parties participating in the stablecoin's operation due to the depeg event. And then there's regulatory risk. Stablecoins depegging can also bring about regulatory problems. Governments and authorities may impose restrictions on stablecoins if they believe that the assets threaten to stability and the broader financial system. Now, considering the above risks, investors and traders alike should keep a close eye on the performance of stablecoins in their portfolios. Research the stablecoin issuer and its collateralization and be on the lookout for any indication of depegging or other problems that might impact the stablecoin's value. They can also think about diversifying their holdings by using a variety of stablecoins or other assets. This can lessen the chance of suffering losses in a stablecoin depegging event. Now, that's the risks and challenges that come with stablecoins, and also that's how depegging can occur with them. But I hope you guys did learn something about a stablecoin, and hopefully you didn't get hurt too bad for USDC holders out there. And because I believe right now, let's see, yep, it's at 97 cents, so it's making its way back up. The DAI is at 96, so it got hit as well. Looks like USDT is the only one above the stabilized section. But yeah, but this is how and why stablecoins depeg. So if you guys enjoyed the article, hit that thumbs up for me, subscribe to the channel, and until next time, the Crypto Sherpa is out.